We are back after the long holiday weekend, and welcome back, everyone, to the morning show here on Stock Market TV. We got a lot to get to today. Callie Cox is our guest from eToro. She'll be on at 9, and then we'll have Ian Cully, who's head of FIC at All-Star Charts at 9:30. Hope you all had a great holiday weekend. Hope you have recovered from your food comas and your football comas and all that good stuff. We got JC here. No Strazza today, but we got JC. So let's roll. Hello, sir.
Oh, Mr. Spencer Israel. Did you miss me?
Yeah, of course. How was your holiday weekend?
Oh, it was fantastic. Listen, a lot of food on Thursday, too much wine. But you want to know the life hack? Here's a good life hack. Find yourself a wife that has too many Christmas decorations.
Okay.
So that after Thanksgiving, when you overeat and overdrink, you get a hell of a workout bringing up all the shit from the basement so that she could decorate the house for the holidays. So that's the way to do it. You drop some LBs, net. It's a net win.
It's a net gain.
It's a net gain,
Nice.
and you can still kill yourself on Thanksgiving and still come out on top after that. So my wife fits the bill. She is beyond insane with the amount of decorations that she has in our basement. And then I made a huge bummer, dude. My wife had never been in our attic. So I was trying to keep it from her because we have a humongous attic and I didn't want her to know how much room we have up there.
Right.
And she went up there, and so
see, mine's afraid of the attic, so that's not an issue for me, I think. Yeah.
Good. My wife just realized how much storage room we have in our attic. So that's a bummer too. So other than that, so anyway, how about yourself there, Spencer? Everything good?
Yeah, pretty good. The MVP of my holiday was Stu Leonard's, which is a New York City area grocery store. We had plans as a family to go to this hotel in Pennsylvania. We had a last minute chaotic family emergency that went out the window, and in the span of a couple hours, a few people went to Stu Leonard's. They grabbed a shit ton of prepared foods. We brought it to someone's house. We had a Thanksgiving super last minute, and it kind of came together. And MVP was so. Imagine going shopping basically on Thanksgiving for Thanksgiving food, which is what we ended up having to do. And MVP to Stu Leonard's for coming through in the clutch for us.
Shout out Stu Leonard's, great place.
Yeah,
they're all over. They got one in Connecticut. They got one by the Tappan Zee. There's a few of them.
Super Bowl is Stu Leonard's. We wouldn't have had Thanksgiving if not for them. So thankfully,
you can take the kids and you can press the button and it makes the cow noise. It goes
right. So yeah, I mean, it was I think I was thinking about what you said last week, because you always said that this is your favorite holiday of the year, and it's probably mine too. And actually, this past weekend is probably my favorite weekend of the year when you think about the things, the holiday and the family and the food and the football and the pretty basically a 4-day weekend, right, for everyone. And it's kind of the same. It's basically the same day every year, right, or the same day of the week, right? So. I love that. I love this past weekend. Got a lot done. I'm almost done assembling my desk. I'll have a desk soon, which will be very exciting.
Who's fancy?
Move into my office and get out of this temporary. Anyway, yeah, good weekend, great weekend. Excited to be back though. What do we got going on here? Should we talk
about this bull market that just turned 17 months old?
Yeah.
17-month-old bull market. People are telling me it's a bear market. We're 17 months into the bull market. People telling me there's a recession and a crisis coming.
I saw a lot of bullish headlines over the weekend. A lot of things, whether it was like, oh, the huge Black Friday shopping up year over year, whatever, or holiday season, investors, gearing up to buy as the end of the year gets near, and the headlines that I read all sounded very positive over the weekend. I'm not sure what that means, but here, let's bring up some charts here and do some state of the markets.
Hit it. I think it's probably smart to start with the world's most important stock market index,
Mhm.
only 2.6% from a new all-time high, Spencer. How do you feel about that?
I mean, yeah.
Does it make you
Yeah.
feel
I
good?
mean, I mean, it makes me feel good. All-time highs are fun and they're cool and they're interesting, right?
And they're
So
profitable for those who own it, and
that's
I'm being
true.
told that there's a crisis, but it seems as though the only crisis that's out there is the underallocation of equities in investors' portfolios. Records amounts of cash and
Yeah.
all kinds of
Well,
short positions that we're seeing
look,
out there.
I, yeah. So to the comment about the record cash, yes, money market funds are at like all-time highs and but like that may not that doesn't feel as bad when you're getting like 4.5, 5%, right? On that.
I mean, the Nasdaq's up 50% over
No,
the
no,
last
no, no,
year,
no,
so
no, no.
if I was getting 5, I would be
I,
ramming my head
I
against the
know, I
wall.
know, but like I don't know. I haven't decided where I land on this, but I have a feeling that like people I've heard and I've said too like couldn't there be this huge tailwind with all this money on the sidelines and money market funds coming into the stock market?
Yes.
But if you're, I would imagine for a lot of people out there, if they're getting 5%, that's enough, or 4.5, whatever. That's enough for them. Like
Oh, Spencer,
some people,
you're so adorable, Spencer. It's so cute sometimes
no,
how
no,
you think that
not
you
investing, not
think
professional.
hold
Okay,
on, stop. You're thinking logically.
yeah,
Now, investors and the market is
yeah,
not logical,
okay.
right? Because there are human beings involved and there are emotions involved, and there's this little thing that we like to call
FOMO. All
FOMO.
right.
And when your neighbor is getting 50% on his cues and you're sitting there with your thumb up your ass getting 4.5%, how long do you think that that's going to fly? Because
Yeah,
because
yeah.
realistically, a Toyota Corolla is very practical and can last a long time. But when all your neighbors are getting their Range Rovers and the Benz and and the nice and the new Tesla and all that stuff, you think you're going to be thrilled with that Toyota Corolla, even though, to your point, Spencer, it's perfectly fine and practical, right?
Yeah, yeah.
It's just
You
not
look.
going to fly.
You're right. You're right.
Your deck is falling apart in your backyard and your neighbor's getting a new deck.
Yeah.
You don't think you're going to get a new deck? Come on. All your friends are taking their kids to Disney World, and your kids are like, how come all my friends are going to Disney World and we're not going? Guess who's
Hmm.
going to be going to Disney World?
That's right. That's right.
Right? Is it practical to spend $10,000 on a trip to Disney World when you haven't even left yet? Definitely not.
It is
Definitely
not.
not practical or logical at all. But that's life, Spencer. So, yes, logically speaking, some of that 4.5% is probably not terrible.
Mm.
But that's just not going to fly in an environment where animal spirits rule.
Yeah, I think also the sentiment, at least like with like the small money, right, with retail, like our friends and our neighbors, it won't really like it won't. There every year there's always going to be a huge jump when the calendar turns from one year to the next year, and you get all the headlines, especially this year, all the headlines about how great a year it was for the stock market, which many people, our friends, our neighbors, family, whatever, may not necessarily be aware of, right?
Go to the next slide. Go to the next
But
slide,
they
Spencer.
will be aware of it in a little over a month, right? When we're in a new year and they see a million headlines about how great a year it was, and they'll be like, "Huh?" Just a thought.
Well, it was the best first 6 months to the year in the history of the Nasdaq.
Yes.
Um, you know,
And then
getting
we went sideways for what, 3 months, 4 months?
who's we?
Um, I don't know, the indexes.
Some did. Some went up. A lot of them actually went up. And then the Dow Jones Industrial Average 2% from new all-time highs. Technology from last summer's lows up 51%. The Q's up 45%. Communications up 35%. S&P's up 27%. Industrials up 27%. Discretionaries up 26%. Financials, believe it or not, up over 18%. So one of the things I'd like to point out here is that the leading groups, and we could throw these days communications is really driven by Google and Meta, so we could just group communications in with technology. Technology, industrials, and consumer discretionary are the best performing sectors in this bull market. And Spencer Israel, when you go back and you study every single bull market in American history, there have been quite a few. You know what you're going to find?
No.
In the early stages of those bull markets, almost every time the leaders are technology, industrials, and consumer discretionary. So this is actually perfectly consistent with bull markets throughout history. And you know what else you're going to find, Mr. Spencer Israel? The worst performing sectors in those bull markets tend to be those defensive areas like utility,
Utilities,
real estate,
staples. Yeah.
consumer staples. And what do you know? This time is just like those.
Yeah, I think the biggest thing that's kind of struck me over the last several months when we've been talking about it repeatedly is just how normal, in a variety of ways, how normal this bull market is. It's normal with regards to historical bull market performance patterns. It's normal with regards to seasonality patterns. It's normal.
Sector rotation,
Yeah, it's just everything about it.
breadth expansion.
Right. I think like that's the biggest thing is this is like a mind-blowingly normal market, which I don't know if we've seen that, frankly, in several years.
And
Right.
you know what's hilarious? You know what's hilarious? On TV, they tell your parents that it's the Magnificent Seven, right? And it's the Magnificent Seven stocks that are the only ones going up. It's actually the Magnificent Seven sectors.
Oh, hell.
So it's the Magnificent Seven sectors, but your parents on the nightly news think it's only 7 stocks. Turn that shit off. They're lying to you. They're not here to help you. It's malicious at this point.
Stats never lie, but they can be very misleading. So yes, if you want to paint that narrative, it can be done. It can be done with stats.
The good news is that like humans. Speaking of not being logical, humans, a lot of them are really bad at math, like terrible at math. But even more of them are just lazy. Like they just refuse to even do the math. So when they're told using some fakakta, reverse engineering of the S&P 500 where 7 stocks are driving, like what kind of serial killer thinks that way? Like since when is this like arbitrary Standard and Poor's formula, like some kind of religion or something? People are very strange how they behave, and humans making irrational decisions is perfectly consistent with all of human history. So none of us should be surprised, but I try to do a good job of sort of pointing out when humans are behaving irrational so that we can profit from them.
Well, clearly some people, a lot of people are not behaving irrational because the market is made up of many individuals and they're behaving rationally, right? Because the market's behaving rationally. So
I don't know about all that. I don't know about rationally, but in terms of their behavior being consistent with bull markets throughout history, that is indeed the case. I got a good one for you. Throw up the next chart. Speaking of breadth expansion and only 7 stocks going up. How about banks. European banks making new 52-week highs? Spencer, man, I'm old enough to remember when we would have crisis all the time. Like we've had plenty of bear markets and crisis, and every single time European banks are front and center, leading the march down to zero.
Do you remember that? What year was it? Was it like 2016? I think when Deutsche Bank was like going to zero. Yeah, it was 2016, I think. Deutsche Bank was like the end. Like I remember watching CNBC and they had like graphics on the screen like is this the end of Deutsche Bank, right? Like it had fallen below its financial crisis lows, and
I remember I was one of those people who thought it was the end of Deutsche Bank and Credit Suisse for that matter, and I was
well,
wrong. We changed our minds in early February of 2016, and we let the data dictate our decision making. So yeah, I do remember that well. I was one of those who thought that Deutsche Bank was gone. I remember being in San Francisco giving a presentation at an event talking about the end of Deutsche Bank. I remember vividly. This is 2015.
So what is in this index here? The Dow Jones European Financials.
So you got a lot of these. These insurance stocks, right? Like Zurich Insurance.
That's why.
What do you mean? That's why?
Because they're not banks. It's like financial services, right?
Well, first of all, there aren't that many banks in Europe left. I don't know if you heard.
Right. Okay. So that's why the index is doing what it's doing, because it's not actually the banks. It's financials,
Well,
right?
HSBC and UBS are two
Okay,
top holdings.
fine.
BNP Paribas, Banco Santander. I know that you're not Cuban from Miami, you're a Jew from New Jersey, but Banco means bank.
Santander is everywhere, man. I see them all over the place.
Yeah, but there's multiple Santanders. There's Banco
Oh,
Santander in Spain, there's Banco Santander Brazil, Banco
okay.
Santander Chile, and these are all different companies. So it might seem like they're all over the place.
That's
But
not
that's
confusing
that's
at
only
all.
because you're reading the first word, banco.
No, it's
Uh,
because I'm reading both words and they're the same. But okay,
Yeah. So, no, Spencer. The reason that it's doing so well is not because of the insurance stocks. Now,
okay,
granted, insurance stocks have been doing very well, both in Europe and in the United States, of course. But there are plenty of banks: BNP Paribas, like I said, UBS, HSBC, Banco Bilbao, Vizcaya. You know,
yeah, all right. I mean, I hear. I don't remember the last time I could say, "Hey, look at these European bank stocks," right?
that's
They
right.
don't, yeah, they don't. But even going back, even this is only a 1 year, 1 year chart, right? Or year and a
But
half.
it
But
goes. It goes. This is a multi-year high there, Spencer.
yeah, right. I know that's kind of my point. Is like
Yep.
if you zoom out, it almost it looks even better. So,
That's right. Why don't you go to America? See what's happening here, good old America. And then here we go. U.S. financials making new 8-month highs. This one being led by J.P. Morgan, Bank of America, Wells Fargo, Goldman Sachs. Right. Of course, you've got some insurance sprinkled into there as well. Visa, Mastercard, also. I don't know. I see former resistance turning into support. What's so unusual about that?
Nothing really. But again, I would want to see, like for this one, I would really want to drill down and look at the components because we know like CME, CBOE,
None of those are major components. Berkshire Hathaway is a big component,
okay,
15%
fine.
blended.
So there you go, Berkshire, right? So Berkshire, and we can assume that JP Morgan is doing good things, but beyond that, I would have to look deeper because I still remain. I'm like scarred forever, man, of like of banks. So
Why are you scarred forever banks?
because we've had like because we had a major banking crisis in my
Who's
lifetime.
we? Who's we?
Everyone, but it was a long time
What
ago.
major banking crisis? The one in 2007?
Yeah, man.
You're still traumatized by that, bro?
I mean, aren't a lot of people?
Weren't you like in junior high school? Like, what were you even doing?
I was in high school, but I mean, it was. But yeah,
Were,
when you
were you
like,
were you were you long Bear Stearns? Like, who get
oh
why?
my,
Why does this matter to you?
I had a leaps, man. No, I wasn't long anything, but it's just it's one of those things where I think my biggest lesson from that was like we'll never know. Like it's really hard to know exactly the situation with these banks and their exposures, right, and their
They were
leverage.
banks. Those financials peaked in 2006, Spencer. So by
Yeah,
the time the indexes peaked in the fourth quarter of '07, financials were already falling apart.
sure,
So
sure,
like
sure. It took a
the
very long
the
time
only
for
people who
them.
missed
Yeah,
that crisis were just the people that were not paying attention or maybe
yeah.
looking at their charts upside
So
down or maybe watching basic cable, like right? Like those are the people that are always behind. But if you actually took the time to count how many financials were making new highs, the answer was zero. It wouldn't even
right.
take you very long because none of them were, right? They were already rolling over, making new lows. So, I mean, I don't think anybody should have been surprised by that at all.
No, no. So again, like XLF though, like in my head, I see XLF. I think, oh, banks, but like in reality, it's J.P. Morgan, it's Visa, it's Mastercard, S&P Global, BlackRock. These are not banks, right? So, um,
Berkshire Hathaway.
right. So right. I should kind of get over it because it's a little bit more diverse. Obviously, it's more diverse than banks, but
And I got one
those non-banks look good. Is my point.
we got Callie Cox coming in a second. And I got
Yeah.
two more charts that I want to show, but I
Oh,
just want to do
goodness.
a quick rundown of the Dow futures down 60 points here on Monday morning. S&P futures down 6 handles, pretty much flat. Nasdaq futures pretty much flat. 30-year bond futures up again, about 45 basis points on the 30-year. Gold up 45 bips. Silver up 2% this morning. Copper down 1%. Oil down almost 1%. And the dollar falling once again with rates down. Volatility inching slightly higher. VIX closed last week at around 12.5. The lowest
Is
level
that
since
high? Oh,
2020. I think you have to be high to think that volatility is a problem. Um, new multi-year lows in the volatility index. Spencer, I
Mhm.
was promised a crisis, maybe even a recession if we're lucky. Instead, we're getting some of the most calm, low volatility, and uptrending stock markets that I can remember.
Yeah, it would be sort of karmic in a way for the perma bears who've been waiting for this recession that we were promised this year to just this is the new thing to hang your hat on, right? Oh, the recession. Yes, it's coming. It's coming next year. Oh no, it's coming in like late first half. Oh, actually, it's coming in second half. Actually, it's coming in like December, right? Like you just keep pushing it back, and that'll be like that'll be the new thing.
But
Um,
these losers, and I've been
so
doing this for over 20 years, and
yeah,
every cycle has their group of losers.
but the
And
difference
a
is,
lot of times, hold on, a lot of
yeah,
times they disappear. Other times they like come back as a different character, with a different sort of story. Like the ones that blew up telling you to buy gold, like then became like crypto experts, then that blew up, then they became like war experts, then that blew up. Like they recycle themselves as like new characters, like in the Avengers.
the difference is this time last year it was near consensus, dare I say, near consensus that we were going to get a recession in 2023, right? Everybody was saying that all
I know,
across the street, right?
which was fantastic
Right.
because for those of us who took the time to actually count what stocks were doing, by this time last year, most stocks had already bottomed out in June, right? Like we were already in a very strong bull market by the
Yeah.
time these idiots were telling you that we were going to recession. And what was even better is that when you looked at the short interest, these perma bears, not only did they not cover on the way down, some did, but it doesn't matter on an individual basis. In terms of an aggregate, they actually increased their short positions going into the fourth quarter last year. And then they got squeezed, obviously, coming into this year because they couldn't have been more wrong. But the tide had already turned, and they pressed their shorts, which was fantastic because it created such great long opportunities. But speaking of which, and the reason I brought up the perma bears is because they've been telling you that first it was going to be the yield curve. Can you imagine not owning stocks because it makes you that one yield of a bond is higher than the yield of another bond, like, and it makes you sad. So, like, you're not going to buy stocks. Like, what kind of
All
fucking
right. Okay. In defense of that, you're all about historical patterns, right? That is a historical pattern.
you know that they had yield curves before 2000, right?
It's it doesn't change the fact that that is a historical pattern that the yield curve can sometimes predict a recession.
Yeah, and sometimes when the sun comes up, it also precedes a recession.
No,
In the
that's
19
every
in the
time.
19
That's
in the
every time,
in the
JC.
1980s, the yield curve inverted, and once it disinverted, we went on to have one of the greatest bull markets in history. But the
Mhm.
perma bears won't tell you that. They'll point to 2007 because they think that we should compare everything to the great financial crisis. So whenever
Mhm.
you see that, do the opposite.
It was
Um, so
John,
anyway, my
man.
point is, it makes the perma bears very, very sad when the yield of one bond is higher than the yield of another bond. Then they told you that small caps, the underperformance of small caps was the culprit. Again, those idiots didn't take the time to go back and see that in many bull markets throughout history, small caps have underperformed. That's actually perfectly normal. So now that small caps and these perma bears are not telling you, go throw up slide 6. These perma bears are not telling you that small caps are making new multi-month highs. New multi-month highs for small caps. And by the way, these perma bears are also obsessed with the index itself instead of, again, once again, taking the time to actually count.
Okay.
And if you do, go and see what small caps have been doing. Plenty of small caps have been doing very well. Small cap industrials are up 35% in
I
this bull market. Small cap
yeah.
discretionaries are up 25%. Small cap tech up 17%. What 7 stocks? What kind of serial killer thinks that small caps are underperforming? In fact, when you study every bull market in history, you'll find that industrials, technology, and consumer discretionary tend to be the leaders in the early stages of a bull market. And what do you know, Spencer? Even in small caps, that's exactly what we've been seeing. So, again, I don't know what these people are so sad about. I don't know.
Um, but are you not very interested in always hearing the other side of the coin? Like I always want to know. I always want to know how I'm wrong. Always. I always want to
Oh,
hear,
well, see,
right?
when you have as many followers as I have on the old
Oh,
Twitter, and you have
we'll tell
the
you.
email distribution list that we have, we do get a lot of feedback, and
Yeah.
the things that I get are the things that I am addressing on this morning show, right?
Yeah.
This yield curve nonsense, the recession. Like, what recession, bro? Go back and study every recession ever. The stock market has already been falling. By the time these idiots announce that there's a recession, usually stocks have already bottomed. They're on the way back up. So, like, if you're always looking for the recession, you're like the dog chasing his tail. Like you're chasing the lagging indicator instead of just focusing on the leading indicator, which is the prices of assets, which is a discounting mechanism of the future, always has been, continues to be. So why on earth would anybody care what the economy is doing when we know it is lagging? We know.
Yeah, I don't know if record Black Friday shopping happens in a recession, right?
Not where I've come
I
from.
don't know. I don't know. All right, let's bring on Callie Cox here from eToro. See what's on her mind.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Callie.
What's up, y'all? Happy post day.
Likewise. How was your holiday?
Hey, that's what it is.
Just a pretty standard bull market by my count. 17 months in to this bull market, or really 17 months since the end of the last bear market. Again, by my count, you've got technology, consumer discretionary, industrials, all leadership groups in both large caps and small caps. We continue to see sector rotation, breadth expansion, participation around the world. What's everybody so sad about, Callie?
I mean, I don't know. I'm on your side. I mean, from an analyst perspective, look, I can always come up with a list of pros and cons, but we've been saying for months now that it's a bull market until proven otherwise. And you see that in the technical data, just as you touched on, JC, but you're also seeing that in the fundamental data as well. Profits are recovering. The job market is still quite strong, even though it's weakening. So if I'm looking at things from a fundamental and tech perspective, I'm seeing the green light both ways. I mean, to boil it down, this is not a market you'd want to fight.
But can you play devil's advocate though? I would love to know what is the next boogeyman that I am going to be hearing about. Is it because you say in your note,
The
you
election.
say
Oh my God.
hold on.
Don't remind me.
You say in your note like like macro headlines, right? Like so is macro the next boogeyman, whatever macro entails?
I'd say this. So you're right. The focus will be on macro through the end of the year, mainly because earnings season is basically over. And things can pop up, headlines can pop up. I don't have a crystal ball. I can't tell the future, but if earnings season is calming down, but if companies stay out of the spotlight, if we don't get any huge like regulatory headlines about big tech, for example, then yeah, people are going to be focused on the Fed, where interest rates go from here. The CPI report that we have coming out, I believe next week, the jobs report, or the week after, actually, the jobs report, there's more macro headlines. And, I don't think we see such a swift change in the macro trend that, pushes me to the bearish side so quickly. Of course, again, anything can happen. But what I'm looking for in terms of boogeymans, as you put it, Spencer, are things breaking underneath the surface, because there is a lot of pressure on the economy. I mean, we've gone through I believe it's like 11 or 12 rate hikes up to 5%. That's a lot of pressure. And some other pressure valves are coming off the economy. But right now, that's where I'm concerned. And I'm looking toward the banking sector for that. I'm looking toward consumer patterns, because consumers are 70% of the economy. But through the end of the year, I think it's really hard to see, a significant crack form that brings markets lower.
Callie, I have a question. So you talk about interest rates and all these hikes and all that stuff. There are people out there who think that that's information that only they have. Like this is like some kind of like secret that like we've had all these like rate hikes, like almost like the market hasn't discounted those rate hikes, like almost like the market's like doesn't know about it. Like, Jimmy in the corner in his mother's basement is like the only one who knows that right? Like I don't understand how these rate hikes that we've had could possibly be a problem. Like we know, the market knows. We've known for a long time, by the way.
Yeah, you're right. I mean, the market knows. And one of the interesting themes we're looking at into next year is the fact that, the market has front run this for a good year now. So even if we do hit
Two, probably you can argue almost, right?
yeah, I mean, a
It's
year is
early
just an estimate,
2021.
probably
Yeah.
longer. I mean, the beginning of the bull market was October 2022. So there you go. But I think going into 2024, we could also see this difference between what's happening in the economy and what's happening in the stock market, just because markets are so rate sensitive right now. And, like I said a minute ago, markets have front run the hikes and they're clearly front running the cuts. I mean,
Right.
the thing about rate hikes being, this big secret, I don't see how you could argue that. I mean, the Fed is more mainstream than ever. 40,000 people watch Powell take the stand at the post-meeting press conference. So, I think if you're basing your investment strategy on rate hikes, I think you'd probably have to pivot that a little bit at this point. I mean, you've gotten your butt kicked over the past month or so. But the one thing I'll say, and this is me, again, being an analyst, I mean, there's still a lot of pressure on the economy. Rates are still quite high. And if the Fed does achieve a soft landing, then chances are we're going to see rates relatively high, if not lower from here, into the second half of 2024. So from a positioning perspective.
But when you zoom out in rates, and I'm not talking about like interest rates since like before the birth of Christ. I'm talking about like interest rates like the last 100 years, like, are they really that high?
They're not. And by the way, if you have data on the interest rates before in BC,
Bank of America has the rates going back to 3000 BC or something like that. That's a real chart.
Oh my God.
Oh yeah.
Okay, well,
it went viral like a month ago.
Oh my God. Well, I missed that, and the market historian in me really
We'll
wants
send
to
it to
see
you.
that.
We'll send it to you. It's a great chart. Great chart. Very value add. Very value.
But they're not high. And I think it's hard to compare interest rates to historical standards because, I mean, look, like history changes throughout time, but also the demographics are so much different now. Before COVID, the argument, and I'd say the argument now to a lesser degree, is the fact that demographics are driving yields. I mean, the baby boomers are getting to the point where they're holding on to bonds. US treasuries are some of the only games in town when it comes to government debt. So it's really hard to take today's interest rate environment and say, this could look like the 1980s, 1970s. And I mean, there are a lot of different reasons why you could say that. But the relative increase that we've seen has been quite quick, and there is still some variable debt out there. And I'd say that probably, lower income consumers are more exposed to that. So that does make me nervous. That doesn't make me a bear, but it does, make us consider looking at those companies that can survive a recession if we do hit one, because, maybe the market powers through a recession, but some stocks may not.
And what's interesting is that when you go and you look at the components of the S&P 500, I mean, there are hundreds of stocks that are up double digits. That's just in the S&P 500. When you broaden that out internationally, broaden that out to small caps and mid caps, there have been so many opportunities to make a ton of money in this market. I mean, it's almost been next to impossible to not make money in this bull market, right? Like the sheer number of participants to the upside has truly been impressive. But then they tell your parents on the evening news that it's only 7. Where do you think that disconnect is?
So I'm right in the middle there, JC. I think I would disagree with you a little bit, just because the breadth that we've seen in this bull since October 2022 has been a lot thinner than past bulls. So yeah, if you're an index investor, like, you're probably pretty happy right now with your year-to-date gain. But if you're the type of investor that, has looked at the more speculative stocks, has concentrated in certain sectors, then you're probably feeling, a whole range of feelings right now on your year-to-date performance. So I think that argument is a bit justified. Like, some people are sitting on portfolios that, have lost money this year and they're not feeling great about it. And that probably influences their perception of everything else. But at the same time, I mean, I think, in a high interest rate environment, you have to be selective. And we've been saying that for a while. So if you were selective, if you were focusing on those more profitable stocks, then you're probably sitting pretty.
Callie, I like this chart that you had. It reminds me of those like decision tree graphics, and I think we need that'd be a fun way of displaying this information. But basically, very simple question, very simple premise, right? When markets go up, they tend to go up after that. They tend to keep going up, right? Very simple.
Yeah, momentum begets momentum, especially when stocks rally this much. And I was sitting around yesterday, thinking about the strong rally we've seen. And that was the question that was in my mind. When stocks rally 9% over a rolling month, over a rolling 21-day period, do they keep rallying? Like, does this momentum carry over? Because that's the path of least resistance. And it turns out they do. I mean, you can see that on the screen right now. And, I framed it to you this way. Stock prices are moving up quickly. Breadth is widening out. The past 2 weeks, we saw every single S&P 500 sector rise each week. That hasn't happened since June 2020. That is pretty rare. So breadth is widening out. Fundamentals look good. It doesn't seem like we have any big technical levels in front of us, although y'all could tell me a little bit better about that. But, I really think this is a market firing on all cylinders, and you don't want to fight it.
I want to point to the percentage of stocks on the New York Stock Exchange above their 200-day moving average. We're sitting right around 53%. When we hit that 70 number, that number tends to get hit when bull markets tend to last longer. Like the longer bull markets, we tend to see that 70 number hit. Right now we're at 53. So something to keep an eye on moving forward. When you look at the individual sectors, somebody made a joke about the Magnificent Seven. They're not referring to the stocks. It's actually the Magnificent Seven sectors because so many sectors are actually doing so well. When you look at the sectors above their 200-day moving average, go down the list. Financials, industrials, even healthcare, technology, obviously, communications, materials, energy, everything except utility, staples, and real estate, right? So the sectors that are supposed to do well in a bull market are doing well in a bull market. Consumer discretionary, right? The sectors that historically underperform in a bull market are underperforming this bull market. Also, when it comes to breadth expansion, when you talk about how perhaps this bull market might have more narrow leadership, I think you mentioned, right? Narrow leadership doesn't necessarily equate to widespread distribution. There's nothing wrong with narrow leadership. In fact, there's precedent. Go back and study every bull market in history. I encourage the listeners to do so. Callie, I know you've done that. Go back to the late 80s. Look at 1988, for example. You didn't really get that monstrous breadth expansion until 1988, right? And then into 89. And you saw it in the early 90s also. So, comparing everything to 2000 and 2007 or the 2003 bottom and the 2009 bottom, there was bull markets before that. Go study those. There's plenty of precedent. So while this one might be maybe the leadership might be a little too narrow, you don't have widespread distribution to counter that, right? You have sector rotation and follow through, and we're continuing to get breadth expansion. By the way, European banks are making new 52-week highs.
Yeah. I think there's a lot to be happy about here. And one other thing I'll point out, JC, is that sentiment is still quite bearish.
Oh, yeah.
Cash on the sidelines has piled up this year. I believe it's like money market assets are up 1 trillion. Inflation adjust that, it looks a little bit different, but cash is still piling up. And if you believe, like we do, that this is the beginning of a bear market, I mean, that's gas in the tank right now, espally considering
the beginning of a bull market, you mean? Beginning of a bull market?
Excuse me. Beginning of a bull market. See?
Freudian slip there, Callie?
No, just early Monday morning. But, that's something to consider too. I mean, sentiment has been really sour over the past year, and that's led to relief rallies because people have, felt better about less bad news. And 5% rates aren't going to stay at 5% forever. So, where will that cash go? How rate sensitive will people be?
Can you, Spencer, can you throw up slide 2 to show Callie this chart? I think she's going to like it. So sentiment is hard to quantify, as I'm sure you've learned over the years. And we agree. So one of the things that we find a lot of value in is really aggregating a lot of these sentiment indicators and information. We take the AAII poll. We take the Investors Intelligence Advisory poll. We take the active investment managers of the NAIM. We take the volatility index, put call ratios, and we aggregate them all. And somehow, Callie, to your point, we're still on the pessimistic side of the equation. Consumer sentiment, which is not even in this formula, also near historic. It really is really impressive just how pessimistic people are.
Yeah, we have a similar metric over here at eToro, and it's telling us the exact same thing. If you cherry pick sentiment indicators, like the VIX, for example, people point to the VIX and say, "Oh, it's at 13." That means that people are way too salient about the future, and it's just so hard to say that. I mean, the VIX is another talking point entirely, but the difference that we see between everyday investors, between institutions, between how people position now in this weird market makes it, like you said, really hard to read sentiment. So you have to look at composite of indicators.
And volatility historically peaks in October, and it did this year too. So, like, what's everybody so surprised about?
Like I said, the VIX is another talking point. I still think it's influenced by market structure factors. I wouldn't look at it in isolation, even though it is one good sentiment indicator. It's one of the better ones out there. But again, you have to look at the composite. You have to look at the context around you.
All right, guys, everyone. Callie Cox is a strategist at
Hold
eToro.
on, I have a question.
Oh, sorry.
We have Callie in the house.
I'm here for it.
One more. All right, Callie, here we are. So it's November the 27th of 2023. To ask you what you think is going to work between now and the end of the year. Who the hell knows, right? But, when you think a little bit bigger picture going in through the end of Q1, as we enter the spring, any leadership groups do you see coming here? Any places that you think we should be focused on?
Yeah, so I think it's pretty clear that the rate cut trade is on. And if you believe rates are coming lower, especially given the market reaction we saw in 2022, you have to look at high duration parts of the market. I'm talking real estate, I'm talking tech. But again, you got to focus on the quality risk, right? If something breaks, and interest rates are still quite high, even if they're coming lower, we could see more speculative companies get hit. So we're all about the quality risk and defensive growth, especially in high duration stocks.
How many people think financials are going to be the leader over the next 12 months?
Is that what you're predicting, JC?
Don't change the subject. Don't change the subject. The question was, how many people do you know that think financials are going to be the leader over the next 12 months?
Actually, I have a great survey point for you. So we do a quarterly survey of everyday investors across all platforms, not just eToro. And in their September survey, they were the most bullish on financials of all sectors.
Wow.
JC. Is that smart money or the dumb money?
It's the smart money. Come on.
I'm asking. So you don't use them as a contrarian indicator. You use them. You think that historically they're smart money?
I mean, they've been pretty bang on in this recovery. They've been more optimistic than institutions.
Okay. And they think financials are going to be the leaders.
Yeah. So I'm going to caveat it with usually it's tech and financials are not far behind, but financials actually flipped tech in our latest survey, which I think is pretty significant.
I would love to, we should talk offline. I'd love to play around with that data, maybe smooth it out, right? Maybe create like a historical precedent of sentiment on a sector by sector basis and do like some standard deviation work on those. That'd be cool.
Yeah, totally. Let's talk.
Yeah, I love it. Thank you, Callie. She's great.
Callie Cox,
thanks for having me.
Investment analyst, eToro. I did drop the link, guys, to her newsletter, which is the bottom line. It's on LinkedIn. The link to that is in the description, as is her Twitter, which is also on the screen. Callie, it is always a pleasure to talk to you. Thanks a lot.
Always a pleasure.
Great being here.
Thanks, Callie.
She's great.
She's
big
wonderful.
Fan. Big Twitter fan. She's free. She's a very frequent flyer in the chart report. Pretty much, I would say most weeks she's in there. And so if you don't follow her on Twitter, highly recommend. Great insights. As always. Yep. Okay.
Like insights. That's a good way to put it. She does bring good insights. Like she brings unique perspective. You could tell she does her homework. It's great.
Yeah. And look, like the biggest way I learn is by just following people who know more than me, which frankly is most people, but like people like you, people like her, people like Strazza, the more the merrier as far as I'm concerned. That's why I followed like 10,000 people on Twitter, right?
Listen, we can't be strong in everything. We are stronger in some things. We're weaker in other areas. You know what I mean? Like we all bring something to the table,
Also, way to like sort of kind of call her survey respondents the dumb money there.
I didn't. I asked her if it's historically dumb money or smart
What's she
money.
gonna say? What's she gonna say? You know, the
You
dumb
can say
money.
the truth.
No. All right. I wouldn't do a survey and then call the people that were kind enough to respond to my survey the dumb money. You know,
Why not? If they are, they are. If they're historically wrong, that is by definition.
Nobody thinks they're the dumb money, right?
Obviously, but if I have data that suggests that this particular group is historically wrong, they are by definition the dumb money.
Yeah.
What she's saying is that the people who answered the poll, she has the data, obviously, and historically they've been, and she said it, they were right on the money in this bull market, and Wall Street sell side was not. And also, to Callie's point, it all comes back to incentives, right?
Yeah.
The people she's polling, their incentives are to profit. Their incentives are to make money. On the sell side, it's a completely different animal. Their incentive is not to help their customers, right? At all. Based on the data, it seems as though their incentive is to hurt their customers. But what they're looking for, I don't know what the hell.
I think what it's probably started off as like a way to just attract clients, right? And
it started off as a way to get trades, which sell-side research used to be overcomplicated on purpose so that the buy side would pick up the phone and call the broker to ask them questions, and then they're the ones that get the trade.
Yeah. Nowadays, though, like I've been on calls with certain firms that have like as far as advisors are concerned, and they've touted their research, and it's just like a
problem is they can't find anybody who's any good to hire as a sell side analyst, because they're like, all right, we're going to pay you next to nothing for a really terrible job. Like nobody who's smart and ambitious is going to take that job. You know what I mean? Like there's so many other opportunities out there than being a broke sell side analyst.
It's hard. All right, let's do a few headlines here, and then we can talk about Hot Corner. iRobot, that's going off the board now. They got the conditional approval from it was unconditional approval from the EU. So Amazon's buying them. IRBT, they're done. CCI, I think we have that chart floating around here somewhere. Elliott Management, which has had a stake in this stock for a couple of years, is now going to be more of an activist. They're going to push for change. I think they have a $2 billion stake in this in CCI, Crown Castle. So they're gonna try to push for board changes and strategic alternatives and all that good stuff. So that's up this morning. Like I said, saw a few headlines about Black Friday. Shopify had a press release. They touted how good a holiday it was for them. Big Commerce, BIGC, had a PR about how great their merchants did on their platform.
And what is hold on, so you're getting kind of like the same conclusions from different data. So the surveys are saying record numbers from Friday.
No, it's not
transactions.
It's actually, it's really, because I was wondering this on Friday or over the weekend, because I was seeing all these headlines about like record Black Friday, and I was like, well, it says who? And like I only looked at like 4 or 5 articles, and they all cited the same report, which is it's actually a subsidiary of that company Johnson Controls, but it's Sensormatic Solutions, which is just any old random data provider, right? And they had data that said that in-store traffic was up 4.5% year over year on Black Friday. And so everybody just took that and ran with it. So it's actually not everyone saying it. It's really just one person saying it, right? It's really just one research firm saying that Black Friday this year was, I guess it was a good year compared to last year. And that's all we've got. And then we've got like Shopify and Big Commerce, which are going off their own data as well. But it's not everyone. It's just really one person, kind of for 3 people saying it. So it's, I don't know. Every headline you see is going off the same data point, just so you know.
I mean, it makes sense, man. Consumer discretionary stocks have absolutely been ripping on both an absolute and relative basis. Also, not just on a cap weighted basis, but on an equally weighted basis. Like consumer discretionary stocks have been some of the best stocks. They're telling me the consumer's dead. They're telling me the consumer can't afford anything. The stock market's telling us the exact opposite.
Yeah. I mean, look, if my spending is any indication, then Black Friday sale should be at an all-time high because my Black Friday spending is at an all-time high. But anyway, a couple more headlines. I love when the analysts do a ratings change before earnings report. Gets me on giddy. So Foot Locker reports on Wednesday. They're getting downgraded to sell this morning from Citigroup, which I love that. I love when the analysts, as much as we hate on them, they're making a call before the number. That should be their job. Frankly, if they're good at their job, they should have insight into what the company will say before they come out and say it. So I do like this.
I honestly don't know what their job is, because their job used to be to generate income by getting the buy side to trade through them. But ever since, the MiFID II and the Chinese wall and all that stuff, like what is their role in society other than for us to use this contrarian?
No, it's content. And like I said, it gives talking points to advisors, right, who are pitching clients. That's their role, right?
If your advisor is talking to you about the research
that's what they do. That's what they do. That's what they all do. I've been on calls with advisors at these big banks, right? And like
I talked to my financial advisor about like my kids' college retirement.
Yeah, but is your advisor at like a big Wall Street bank?
$4 billion in assets under management.
All right, I mean
nothing.
So like when they're pitching clients, it's that's part of the pitch is our in-house our top of line in-house research team that is putting out market insights,
which by the way we know is bullshit. And then also the best is when they tell you cap intro. That's another good one. Oh, we have a great cap intro. Oh my god, they're lying to you. They don't.
I also love everyone is touting now they're like all these wealth management firms or advisors, and they tout their access to like basically like private equity or like venture capital, right? Like as if you're going to give me the good deals, right? Like I'm so special that I'm going to get the good deals here. Oh,
let me tell you something. If you're getting the good deals, if you're getting the deal, is because nobody else wanted it.
Right.
Anybody who matters turned it down.
You're right. Yeah. Okay, so let's see. Yeah, so I covered a few headlines. GE Healthcare, not a stock we discuss very often on the show. It's pretty new. They were leading my down filter this morning, and all I saw was downgrade. So analysts, can sometimes move stocks. GEHC, I don't know what it's doing right now, but there's a chart. It's yeah.
GEHC. So this is the healthcare spinoff of General Electric, which, by the way, $33.5 billion. So it's not nothing.
No. I would love to see the performance of this compared to GE, because the whole reason they did the spinoff, right, is to unlock value and
all they've done is not do that.
No, I don't know. I don't actually know, but I would love to see the performance of GE and GEHC since the spinoff. Sure, I'd be very curious to see that.
All right,
because that was the whole issue with GE, was that they had all these like random ass businesses that were weighing the company down, and they had no way to synergize them and streamline costs, and so they spun off the healthcare. Well, they also spin off the. There's one more thing they spun off too, I believe. I can't remember what it was.
Throw up slide 2 there if you want.
I think there was one more spinoff. Not aviation. They still have that. Well, they're all right. Well, that's not what I would have thought.
Well, GE's been killing.
But I guess it makes sense. I mean, that's the whole. This is the whole point. This was the whole point of the exercise, right? Is you spin off companies to unlock value. So yeah, GE sort of shed some assets. It makes them a little bit lighter. They're not weighed down by all this debt, and there you go. So GE. I mean, I don't look at GE too often these days, but
why not?
Yes, because for basically my entire career, it did nothing but go down. So
Maybe
I mean,
maybe you should recheck that career of yours because it's been absolutely ripping and has been one
yeah,
of the market leaders.
I,
Throw
I,
up slide,
I
new
see.
slide two. Throw up new slide two.
$46 last year. I see it.
What is it about the new 5-year highs that you don't like? This is actually the best GE has ever done your entire career.
Yeah.
What's the problem? Are you not
No,
entertained?
no. There's no problem. I have no problem with like with anything. For like again for a trade, I tend to look at things like a lot of times. My first instinct is how would I feel with this as an investment, which isn't always the best instinct to have, by the way. But that's like my first instinct is would I invest in this, not would I trade this, but I would trade. I would trade most things, and I should. This is a great trade. This is a great trade.
It was,
Yeah.
and we've been all over this.
Yeah.
I mean, you know what, and I'll tell you why we've been all over this, because it was actually very surprising when everybody's telling us the world's coming to an end, and credit event, crisis, recession, Biden, wars, inflation, all those things, and GE's making new multi-year highs, right? Because this didn't just happen. This is actually GE's been making, during the quote unquote banking crisis where like 3 banks that no one's ever heard of disappeared. Remember that? Remember how adorable that was? Banking crisis. No one's ever heard of those little banks, dude. GE was making new multi-year highs in that environment in March this year.
Yeah.
Banking crisis.
GE spun off its bank. Ally was GE Financial, right? I thought.
I don't know. Was it?
I think
this
so.
is something Strazza would know. By the way, shout out Steve Strazza, hanging out in Miami. Just living his best life.
Doing Miami things.
He sent a picture. He was with the Shaffers. I didn't know he was with the Shaffers.
I saw.
Speaking of living their best life.
No kidding. Anyway, yeah, GE looks great. It's funny because I think about the last bull market, right, from 2 years ago now, and it was exemplified to me. That will always be a shitty company bubble, right? Of all like the shittiest non-profitable growth tech companies, all these SPACs. That was like that was the epitome of that. That was the headline to me of that bull market. And this one has been, like I said earlier, as normal as it can be. And also you get these like huge rallies in GE, which I never would have thought I would see, and European banks, which I never would have thought I would see. Right? I don't know why I would say never, because everything is cyclical.
Those are the things that happen in bull markets. Even GE and European
banks. I know. Even GE and European banks. So,
that's right.
But I'd rather be talking about that than like the latest EV stock that makes 4 cars a year and has a PE of 500.
I know, Spencer. But listen, there's a time and a place for everything. And when interest rates are getting destroyed, the longer the duration, the better it is. And then when interest rates started to rise, those long duration assets, those hyper growth, SPACs, like you said, like those types of stocks historically don't do well when interest rates are rising. And if, I would encourage you guys, like, go meet a fundamental guy. Like, if you don't have like a friend that's a fundamental guy, like go find one. Like, I don't know if they have like dating apps for like fundamental people, but find yourself one of those. And what I would encourage you to do is have them show you like the math where you could see how much money they're losing and how much it's that, because these long duration assets, they're talking about earnings like 10 years from now, right? But when you see interest rates going up even a little bit, those things get destroyed, right? So find yourself, meet at one of these fundamental people on the app and take them out for a drink or something and let them show you their spreadsheet. And it's fascinating.
If you want to really have fun, go back and look at any of these SPACs, and all their SPAC prospectuses are all online. You can go look at their revenue projections for 23, 25, 27, 30. They've got wild growth projections.
I'm sure they're hilarious, by the way.
They were funny in the moment. Like we all knew in the moment, like this is insane. But they're even funnier now that they're actually not. They've been going backwards, right? Like not up, but just backwards, right? So
good.
Yeah,
good.
Pretty funny. All right, do we have? I think we have a hot corner today. I think I saw a couple things.
You could throw it up, but there's nothing. Throw it up.
There's nothing. All right,
hit it.
So hot right now.
Yeah, this Arbor Realty, right? Interesting. $500,000 from the CEO, CFO, ABR. How much you getting paid? You're getting paid 14%,
God
which is not.
damn.
Yeah, God damn is right.
Oh
This
my
one
God.
is this one out of Uniondale, New York. Anybody know where Uniondale, New
Yes,
York?
I know
Oh,
where
it's in
that.
Long, it's
I
in
know
Long
where that
Island.
is.
It's in
Yeah,
Long Island.
that's where the Islanders play, isn't it?
I
I think
thought
it
the
is.
Islanders played in Brooklyn.
No, not anymore. That was that was for like 2 years.
They don't play. The Islanders don't play in Brooklyn anymore.
No, they played in Brooklyn for like a year or two, and then they're like, "This is stupid."
Really? Shows you how. See,
Yeah,
Cubans
yeah,
don't play hockey. We don't know anything about hockey.
right.
For the record, I love going to hockey games, but clearly I
But
don't even know where they
but
play.
for the record, no one likes going on Long Island, so let it
I
be
have
known.
no problem with Long Island. You go to Hamptons, Montauk is beautiful. The North Fork up in wine country up there is fantastic. Why are you hating on Long Island?
Too dense, too many, too crowded, too many people.
That's probably true because
Yeah.
northern New Jersey is not too crowded, right?
No, that's why I moved away. That's the same exact reason why I
Fair.
moved away
Touche.
from North Jersey.
Touche. Fair
Yeah,
enough. Fair
too
enough.
crowded. Yeah.
I want to show kind of so here's the thing. When we look at charts, we look at a lot of price only charts because we are this is technical analysis, right? We're trying to study the behavior of the market, and by doing so, we need to look at price. But when you're looking at the total return of something, that's a different story. So when you have a dividend like this, when you look at a price only chart, throw up slide 2. When you look at a price only chart, you're not getting the whole story of just how something like this has performed. So when you look at Arbor Realty and you're like, it looks like it hasn't done anything for a while. Yeah, it might look that way, but when you add up the total return, it's a different story. So, I have this debate all the time. Rob Koifman, speaking of which, is the Koifman chart. Rob Koifman swears up and down, always has, that when you're analyzing the supply and demand of assets, that you want to look at total return. When I couldn't disagree more with that, you want to look at the prices of assets. When you look at total return to see how something has performed, that's something else that we're doing, and this is that.
Wait, can you explain that again? Because I also like total return.
When you're looking at the supply and demand behavior of assets, when you're looking at support and resistance, investors remember the price they paid, not how much money they made or lost. They remember the price they paid. They remember the price they sold it at, right? Price is what pays. The total return is something else.
But yeah, total return tells the full story.
No, it tells a story.
I think a lot of people look at how much money they made, not and the price they bought and sold at, but also how much money they made, or how much money they could have made. Right? I like total return. There's a time and a place.
There's a time and a place, but when you are analyzing the supply and demand of an asset, you want to look at price only, not total return. Total return is going to give you completely different data. It's going to skew that data, and you're going to be wrong a lot if that's the data that you're using.
Total return will just, it will tell you how much money you could have made, and that is that. So okay,
right, which is great information. But when you're studying the supply and demand of an asset,
sure, I got you.
That is not what you want.
It's different things. It's different things. The different data points for different.
Sam nailed it. Price has memory. That's right.
Yeah. Look, there are different data points for different objectives.
That's right.
But they're both good. So
and we use both, by the way.
Yeah.
For different reasons, right?
Yeah.
But when you're studying the supply and demand of an asset to understand the behavior of investors, price is what we want to look at, not total return. I love you, Rob Koifman. I love you so much. I really do love that man. But he's wrong.
All right, we're going to hopefully have Ian and Cully join us in a couple of minutes here for do some fic at the end of the show. Haven't spoken to Ian today. I hope he's around. We'll find out. In the meantime, what else was on my list here? I think that was kind of chart report was quiet for the holiday week, and so there wasn't much there. Oh, you know what I want to mention before I forget is we talked last week about the All-Star Charts Black Friday sale, which was running through Friday. Late on Friday, we did decide. I say we, the powers that be, not me. The powers that be decided to extend the sale through, I think, end of day today. So I'm going to drop the link. I'll put it in the chat. I'm going to drop it on the screen as well. That is the link to the Black Friday sale on All-Star Charts. It's more than 50% off a annual membership. So I'll drop it in the chat right now. It's right there on the screen. You can see it. And if you want to click on the link, you can use that guy in the chat right there. This sale does end tonight, I'm being told. So if you didn't get your Black Friday All-Star Charts deal and you thought you missed it, you have a little bit more time, but just a little bit more time.
And I would encourage you to go check that out and watch last week's live conference call. Everything you need to know for the end of the year as we get ready for Q1. If you've been watching these live conference calls all year, you've participated in this bull market. And if you didn't, and you were listening to Wall Street Sell Side, or the angry man on the Twitter, or the pretty lady on the TV, like if you were doing any of that stuff, you're probably very confused. But we like to stay on track. We take the time to actually count around here. So if you're interested in the results of that counting that we do, I would highly, highly encourage you to listen to Spencer here. And the first thing you should do is check out last week's call.
Yeah, the conference calls that JC does are I'm told like by far the most popular aspect of the All-Star Charts membership. And I keep saying like JC did a free call like a month ago, but and the feedback that you got for that I think was really good, but that was just taste. That was a taste.
I'm pretty sure the stock market is up every single day since then, so it makes me look like a genius.
Well, yeah. The timing of
that also helps.
Timing of that was precipitous. Anyway, get.allstarcharts.com/Black Friday. Link on screen. Link in chat. I'll pin it there so it doesn't get lost. There it is. Pinned to the chat. Check it out. We will not be talking about this tomorrow because the sale will be over by then. So don't say I didn't warn you because I warned you. All right. No Ian Cully today. He just told me he can't join, which is a bummer, but hopefully he can join us tomorrow or the next day because we want to talk some fixed income, some commodities, man. I was reading a lot about commodities over the weekend, and I'm not really sure why.
What were you reading about?
I was reading about like a lot about South America, which is like, commodity driven economies, right? So I was just reading about South America, but I think just following up a little bit on the Argentinian thing, reading some articles about that, and just kind of looking at performance of South American ETFs this year, just because, I was curious. I don't own any South American assets. And
you don't have any Mercado Libre?
Well, unless it's in the, is it in like the S&P or something? Because in that case, I do own it. But
why don't you throw up slide 2? Because this is going to be a big one.
Yeah. Yeah, man. Look at that. Stop going parabolic.
How this reacts to those former highs is going to be a big one. As you guys recall, as soon as the U.S. 10-year yield peaked in the fourth quarter last year, stocks really started to rip. So if you think that, and interest rates don't even necessarily need to collapse. If interest rates start going just kind of sideways for a while and kind of do nothing, like that would be pretty constructive for sure. I've got a chart that I want to show you guys here. This one kind of pretty much tells the story. So interest rates and the dollar have been correlated, not always, but certainly this cycle. Why don't you throw that slide 2 up there? Stocks and bonds have been trading together, generally speaking, inversely to the United States dollar. Notice that dollar strength throughout 2022 came with weakness in the stock market. As soon as the dollar index peaked at the end of September, early October of last year, stock market bottomed at the index level anyway. The internals had already bottomed months earlier. And then, of course, throughout this year, as the dollar has been selling off, stocks did very, very well. Not a coincidence that as soon as the dollar bottomed in July, stock market peaked. And also not a coincidence that as soon as the dollar peaked in October, stocks started to go up. So the negative correlation between the dollar index and the S&P 500 remains as strong as ever. And I've had a front row seat to people trying to fight this trend for whatever reason. And every single time they've tried to fight it, they have been wrong. And we look like geniuses because we've just been betting that the correlation remains in place. And we're going to keep doing that until the market proves that the correlations have changed. And the market just keeps proving the opposite. The correlations just, if anything, they're getting stronger.
Yeah, and I mean the inverse correlation is happening again today, right? So
Yeah, that's right.
Yeah, so there you go, right? I was just kind of looking at things. I haven't looked at the market yet since we opened.
Yep. So just do a quick rundown. Dow futures down 60 points here. S&P futures down 10 handles, about 20 basis points. NASDAQ 100 futures are flat. 30-year futures in the bond market up about 40 basis points. Gold up 50 bips. Silver up almost 2%. Copper down 1%. Oil down about 50 basis points. Dollar just generally mixed here. I will pull up the dollar index futures now in a second. Dollar's pretty flat actually today. General, mixed, right? Yen stronger, euro's weaker. And of course, in the old cryptocurrencies, Bitcoin down 650 points, Ethereum down 44 points, really in that range that it's been in over the last couple of weeks.
Speaking of cryptocurrencies, I'm especially mindful of cryptocurrencies over the Thanksgiving holiday weekend, pretty much ever since that first bull run in 2016, 2017. Crypto was pretty quiet this weekend. I was trying to keep an eye on it and didn't see, a ton. You saw a little spike there on Friday, little spike that we've given back, but I got to say, I'm a little bit disappointed. I thought for sure with the fact that Bitcoin finally broke above that, 31,000 level and then some, and it held it. I thought for sure we would be seeing a little bit more euphoria in crypto over the weekend. And
like euphoria in sentiment or in terms of price action?
Both.
It's making new 18-month highs just a couple of days ago.
Yeah, no, I know.
In that range.
I just think, it was a quieter weekend on the crypto front than I would have thought it would be, which is okay. I'm not, it doesn't mean anything. But I just, was sort of hoping for more action there.
Well,
yeah, that's okay.
Sometimes it's good to maybe spend some time with your friends and family instead of trading cryptocurrencies on a holiday. Imagine that.
Well, not everyone celebrates Thanksgiving, so
who doesn't celebrate Thanksgiving? People who have nothing to be thankful for.
No, people outside of this country, right?
That's not true. Thanksgiving is a global holiday.
What?
Yeah, people celebrate Thanksgiving all over the world, bro. Where you been?
Well, I know they do in Canada. I don't know about.
Canadians have a separate Thanksgiving. Canadians celebrate Thanksgiving. I think it's our Columbus Day, right?
Yeah, something like that.
People celebrate all over the world. In fact, every year more people around the world celebrate Thanksgiving. It's an uptrend.
Okay, I had no idea.
Just like people in America celebrate Diwali. I'm not Hindu. I'm not from India, but Diwali is a beautiful festival.
Americans celebrate Thanksgiving. Non-Americans don't celebrate American Thanksgiving.
They do. They celebrate Thanksgiving all over Europe, man. I'm telling you.
All right.
As they should.
All right, fine. I'm wrong. I had no idea. I had absolutely no clue that this was a global phenomenon.
Global is maybe I'm exaggerating a bit in terms of a global phenomenon, but people all over the world do celebrate, and more people are starting to celebrate, as they should. It's a beautiful holiday. Give thanks to everything we have.
Yeah, man. It is the best.
I'm telling you. I'm seeing it, guys. Ivan says he doesn't celebrate. Well, maybe you should start. Maybe start celebrating. Tell your friends about it. It's a beautiful holiday. Guru Purnima is a beautiful holiday that they celebrate in India. We celebrate it here in the United States. I think more people should celebrate Guru Purnima, right?
All right, couple questions in the chat. Someone asked for JC. Billy asked for an update on how you feel about gold. Just sort of waiting, right?
I mean, we're in. In terms of like an irresponsibly long position, like mortgage the house, like there's still more that we need to see, of course. But we're in. I own it.
Okay.
I want to own more, but I'm going to wait for that breakout above 2100 to do so. But I'm in. I have enough. I have enough where I'm comfortable. I don't have too much where I'm irresponsibly long before a breakout. You can argue that 1900, 1960 level is a solid one to trade against. I really like it above 2100 though. Like really love it above 2100. So that's where we'll be adding to positions and stuff like that.
All right.
That's how I feel about that.
I guess calls on Thanksgiving and calls on gold above 3100.
Where can we find a broker that will write me TG calls?
2100. So TG is Thanksgiving. Yeah.
Oh.
Yeah. That was a joke. Haha. Yeah.
So that guy's shorting Thanksgiving? That's rude.
It's like shorting America.
Yeah, man.
All right. Gold above 21. And there you go. All right. Let's do some recess and then we can hop a few minutes early today because we got it was quiet last week and it's quiet again this morning. Maybe because everyone's just too busy automatically buying stocks and I don't know.
So I just want to give a shout out to the green room. It's the WinBet green room section of MetLife Stadium. I was there on Friday, and one of my buddies in New Jersey owns like a pest control company or something like that. So this guy's got tickets to everything. So he gave us passes, my wife and I, to go to this green room, which I had never been to. We always go to the 50/50 Club downstairs. The green room upstairs, let me tell you, this was fantastic. I'm eating churrasco with chimichurri, plantains, rice and beans. It's open bar because the 50/50 Club, you got to pay for drinks. At the green room, you don't. And my wife, like sometimes I do bougie things and she's like, oh, you're so bougie. That's not necessary. We walk into the green room, right? And she's like, oh, this is more my speed. This is what I like. I'm like, ooh, who's the bougie one now? Right? So let me tell you, great. We're hanging out with Snooki. Who knew Snooki was a Dolphins fan? Did you know that?
No, I don't keep up with
Snooki,
Jersey Shore characters.
Head to toe, dressed in Dolphins gear. Gave me a fist pump. Snooki, a lot shorter than I thought she was too. Tiny little.
Yes. Yes, she is.
But she was cool. I'd never met Snooki before. Also, we sat right
really?
Next to
I'm stunned.
We sat right next to Baba Booey. For you Howard Stern fans, that was cool.
Baba Booey seems like a really good dude. I'm not like a huge Stern fan, but I would love to meet Baba Booey one day. It seems like a very just regular guy. Right.
Also, great to see the New York Jets losing once again over the weekend. The Jets lost, Buffalo lost, the Patriots lost, Dolphins win again. Bill Belichick. Are they gonna fire him?
That Bills game. Did you see that Bills game last night?
Great game. And I was rooting for Philly for like once in my life.
Wild.
Great game. Dude, that 59-yard field goal in the rain. Man, that was very impressive.
That was great. It was really great.
Very impressive.
My recess is we're finally done buying furniture for this house. We bought a dining room table yesterday. We bought rugs. We've purchased a bed like a week ago. We've bought desks. We've bought tables. We've bought bookshelves. I think we're done. I hope we're done. I can't wait to add up and see how much money I've spent in the last month on furniture. But yeah, man, Black Friday deals, they're still going, right? I mean, I was, although I feel like I got taken. I'd be curious to hear your thought, JC. So I was buying this dining room table yesterday. And you know how like there's always like every sticker has like 4 prices, right? There's like the sticker price and there's the sale price and this and that and whatever. And the sticker price said one thing. And then when the guy pulled it up on like his tablet to show me what it would all cost, it was a higher price. And I was like, and then of course he's gonna lower it. He's gonna lower the price to the original price. And then he like used that as like a cherry to sell me the 5-year warranty, and I freaking bid on it. And I feel like I got taken for the warranty. It was like $150 for 5 years, but that's like pure margin, right? For them, it cost them nothing.
That's right.
And I was like, man, I went home and I was like, I felt bad about that. I was like, I let him talk me into the warranty. I don't know. Should I feel bad about that?
Yeah, you got taken, man.
I got taken. I got taken on the warranty.
You should know better.
I got taken on the warranty.
They got you.
In the moment, I was like, just do it. But yeah, I got talked into it. That was oh well, whatever.
It's adorable how easy you are fooled.
No. I'm not like the world's worst negotiator. I think I was just ready to be done with it, and I was just like, yes, I'll sign. Just let me go home. I'm tired of having this conversation about tables. I want to be done with the whole process. So fine, I'll sign and go away.
Did you go to Fiore's? Have you been to Fiore's yet?
No.
What's the matter with you? Get yourself some roast beef, fresh mutts, gravy. Find yourself a stoop around the corner. Sit there and eat it.
All right. Now I have to just marinate in my sadness for getting taken on this 5-year warranty. Whatever.
Good. You got abused on that one, man.
It is what it is. All right. That'll be our show for the day. We'll end a little early today. We do actually, I don't think we're doing the Flow show because Strazza is in Miami. So we'll see you guys tomorrow morning, same time, same place on this show. Thanks to our guest today, Callie Cox. Thanks to all of you in the chat. The links to all of our things, all of our research, the links to Callie's research are all in the description of this video on YouTube. So thanks for watching. Go make some money, everyone, and we'll catch you guys later. Have a good one.
Adios.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah,